Now, we see the graphs and the details on the sales volumes in the north and outer south regions being the greatest volumes. Is there any change to normal, and did the GFC stimulus for first home owners, I would have thought, would have impacted negatively in that space?
What we've seen is that the volumes have still been very strong in those outer markets. So it indicates, although the first homeowners grant boost encouraged more people into the market, it seems that a lot of them were still very active at that lower end of the market, the first home buyers. Remembering that most of these buyers are coming out of the rental market, probably characterised as being in their mid to late 20s buying their first home. So probably going to some of those outer, more affordable areas, buying their first home and looking at it as a stepping stone as to getting back into the market. What's probably more important is looking at the value of those transactions, and just because we're seeing so much volume in those outer regions doesn't necessarily mean that there's a great deal of value in those properties. Some of those areas are a little bit closer in, even Port Adelaide or somewhere like that. If you look at the total value of transactions, it's got one of the healthiest total value of transactions.
And the graph on that almost is a complete reverse of the previous one. So, you've got your Onkaparinga and Salisbury, Port Adelaide, Enfield at one end, and then the other end, your Walkerville. So, Walkerville was at the front. So that's pretty predictable when you think about it, isn't it?
Exactly right. The inner city markets close to the amenity.
Got the gains.
They've got the gains.
Power on.
People don't want to sell. Why would you want to move out of one of those markets if you didn't have to? Unless you've got a ready-made replacement property. They're going to be tightly held, and people are going to be reluctant to get out of one of those markets.
Now, we talked about stock levels for spring, new stock additions and the total stock for sale being quite flat, and we did briefly touch on it, but nice graph there to just see that visually. And what about the leading indicators where you're saying that the buyer's market is on its way back?
Not so much in Adelaide. What we're starting to see nationally is that the time on market is creeping upwards. It hasn't really started to creep upwards in Adelaide so much, and we're seeing that level of vendor discounting has also started to creep upwards. As the market transitions from a strong value growth period to a period of slower value growth, generally what we find is it takes vendors some time to realise that the market conditions have changed and they can't ask the same prices that they were even 2 or 3 months ago. So it takes time for vendors to adjust their expectation, and what we tend to see is as the market transitions one way or the other, it takes a little while for vendors to react, and you will see a slight increase in time on market and the level of vendor discounting error.
Now, I noticed that the current discounting on average is 5.1% in South Australia compared to a 6% nationally, so that's good.
Exactly. For South Australia, we're not seeing that the level of vendor discounting is as high as it is nationally, but perhaps watch this space. If the market conditions continue to change, we may see a slight increase in that vendor discounting number.
And 41 days time on market's the average?
Exactly. We're sitting at 41 days nationally, and Adelaide's time on market on average is right on that. So about 5.5 weeks to sell a property in Adelaide.
So for those that are watching, that means that you put your home on the market and the average time is 41 days for you to get a sale, which means there's people that get sales very quickly and still some take a while, and primarily we're finding it's based on price. So it's just how it works, isn't it?
Exactly right. And one of the weaknesses with that measure is the fact that you can only measure it once something's actually transacted. So there's properties out there that may have sat on the market for 200, 300 days, not selling because they're overpriced or for whatever other reason. But that can't actually be measured until that property is transacted.
Adelaide's rental yields, for those that are investors out there, how are we looking?
In Adelaide, we're sitting at below average levels for rental yields for both houses and units. What we've found over the last 12 to 18 months is that the strong growth in property values has really eroded the yields. Plus the fact that we saw the first homeowners grant boost that attracted so many first-time buyers into the ownership market, and a lot of that first home buyer demand from this year was pulled forward into last year, and the lowest level of interest rates in almost 50 years. The affordability argument became very strong, so we saw so many people take that opportunity to get into the home ownership market. Unfortunately for rental returns, it's seen that they've really eroded quite badly in some areas. We're sitting at about 3.9% for houses, I think, at the moment, and about 4.5% for units in Adelaide. So watch this space, though, with levels of property growth slowing, investors coming back into the market according to the Australian Bureau of Statistics data. We're fully expecting if the capital growth isn't there in the short term, they're going to be looking to boost their returns somehow. And the way they're going to be looking to do that is by increasing rental rates at the end of a lease term. So we're fully expecting over the next 6 to 9 months we'll start to see some
rental growth.
And we're already seeing signs of that in the Adelaide market. There's already early signs that rents are starting to climb again.
Well, Cameron, we're finding we're at 1% vacancy rate or less, which is just extraordinary. Like, that's tight. That means that there's only one home in every 100 that's available for rent, and the demand's been strong, even through the wet, cold and miserable weather. So could be a pretty good spring.
Exactly right, and that's one of the major reasons. We found that in most areas, the vacancy rates actually eased a little bit last year when first home buyers were so active, but now that interest rates are higher, banks are being a little bit more discerning who they will and won't lend to, we're now finding that the rental market's starting to tighten once again. There's less options out there for people looking in the rental market. So now is the time for landlords to capitalise on that and start to look to lift what they're asking for their rents.